are going to look at is the centralized governance in decentralized organizations, namely DAOs, which should be quite familiar to this crowd. But let me try to provide a big picture. First, we are talking about the trade-offs involved in decentralization, centralization. Why do we need to decentralize? Decentralization is not free. There are trade-offs involved, but there are certain benefits such as the avoidance of single point of failure, the avoidance of any accumulation of dynamic market power. That's why we are aiming at decentralization. But decentralization could happen at multiple layers. In some earlier studies, many of you have contributed to this literature as well. We look at how decentralization is happening at the consensus layer in terms of mining, in terms of staking processes to generate decentralized consensus. And the overall finding there is, even though they're immersed mining pools, we actually don't see a lot of over-concentration due to various economic forces, such as the simple financial principle of diversification. There are questions about decentralization at the asset layer in terms of our income, very concentrated. Income here would mean the mining rewards, staking rewards that's happening on-chain. Our asset ownership on-chain, very concentrated. Our economic activities, very concentrated. And we had an earlier study looking into the Ethereum ecosystem. At least for a period of time, the concentration at the asset layer is more severe than, say, the concentration of income or wealth in the US, the real economy in the US. So all these are pointing to the fact that decentralization is a technical possibility, but it may or may not be an economic reality. It does depend on the type of equilibrium that we observe. Of course, there's decentralization at the information layer as well. What we hope to focus on today for this paper is the decentralization at the governance layer. So I think with this crowd, I don't have to introduce too much the concept of DAOs. It's a emergent governance structure, right? That's decentralized with no centralized authority involved. It's pretty much directed or governed by the community for a particular protocol or for a particular chain. And it's autonomous thanks to the presence of smart contracts that's present or embedded in the protocol in the native chain. And it's an organization, the community is trying to achieve a certain goal. They're trying to provide service or conduct transactions. And what we do know, observe, is that over the past few years, the number of active DAOs have been growing. I wouldn't call it exponentially, but very significantly. And for these DAOs, over 3.3 million active voters actively participate in proposing changes to the protocol, to the governance structure, to the programs that's on-chain, and vote on these proposals. So we are not saying the standard benchmark would be traditional firms. In fact, there's an argument to be made that these DAOs are also early stage programs. So maybe private firms or startups without public equity holding would be the right benchmark. But let's think about the governance structure. At least what we are familiar with now is that for most public firms and traditional firms, the governance structure really involves a separation of ownership and control that has led to agency problems that we have devoted a large literature to. A small group of people actually make proposals and decide. And there are various issues that we document, right, in the literature. Information asymmetry, insider trading, under participation. But one thing that's somewhat mitigated is this coordination issue. we actually don't have to worry too much about under-participation, because by regulation, large shareholders are supposed to vote on key issues associated with firms. That's not quite the case if we move to the DAO world. On the one hand, there is no longer a separation of ownership and control, so presumably we don't have to worry about agency problems. And the hope is that there's less insider trading on particular information that the insiders hold. Transparency is greater because most of the transactions and decisions are either on-chain or publicly disclosed on online forums. And the governance itself is supposed to be easier for individual nodes, small players, small stakeholders to participate as well. So because of that, people were hopeful that we can achieve more decentralized governance. But the truth is, as practitioners as well as researchers gradually realize, that may not be the case currently. And I know we have Uniswap as our conference sponsor as well, but at least this is not something we made up. This is taken from an online post. There are large institutional investors or even consulting firms which play a very important role in the governance in these key protocols. So what we want to do in this paper is essentially provide an initial documentation of whether DAO governance is decentralized at this stage. And what we find is that actually it's not very decentralized, at least less decentralized than we would expect. And to overcome governance issues that we typically face in traditional firm, even without the separation of ownership and control, we still run into issues such as asymmetric information that's leading, as we interpret, to insider trading. There's vote buying activities. Moreover, there are also free rider and under participation issues that we currently face. Maybe we shouldn't call it a problem, because sometimes under participation could be better for certain decisions that are complex. Maybe we don't want retail nodes to carry too much weight in that setting. But at least based on the statistics, what we observe is that the governance is quite concentrated, and there are still existing problems, and that has economic consequences. For example, we find that DAOs with higher level of conflicts of interest, as measured by the level of concentration, so on and so forth, experience larger declines in number of metrics. Here we use the example of total value locked following certain market shocks, especially negative shocks. And not all hope is lost, though. There are mechanisms that seem to mitigate governance issues that helps with decentralization. For example, vote delegation, which we do observe in traditional firms, helps, and quadratic voting, which we don't quite observe in traditional firms, actually also help. I know Gary Scalise has a recent paper on quadratic voting as well. That's essentially what we have in the paper in a nutshell. Now, here is a quick example of the type of proposals that we observe in DAOs. Following the classification of DAO proposals by Ian and Jill, the proposals do fall into several categories, and in our latest version of the paper, we do look into these specific categories in greater detail. Who can propose in such a setting? Well, core team members, service providers, and other token holders can all propose. So in that sense, it is more inclusive. And this is a typical governance process. Many of the proposals start with forum discussion, maybe of existing problems, or certain new initiatives or projects that people are interested in. And then after the discussion, there's typically an off-chain voting stage that lasts for 3 to 7 days. One reason for not doing this on-chain right away is that the gas fee and all the on-chain activities will be quite a lot more costly. So if we can do it off-chain just to aggregate information or aggregate opinion, that'd be very helpful. And then we have a small gap followed by the on-chain voting stage. In many cases, the on-chain voting stage is pretty much kind of officially recording the off-chain voting on-chain. There are some cases where that's a new round of voting and the voting behavior could change as well. After that, within 2 weeks, typically proposals that have been approved will be implemented. Because during the discussion, during all the voting stage, the codes are already prepared for implementing the proposals. And here is our data sample. We get information about proposals and voting records from Snapshot, which is
Will, just a quick reminder, you have 5 more minutes. Okay, thanks.
Oh, okay. I got to move faster. Yeah, so there are several information sources that we draw from: token price, data from coin market cap. The snapshot contains all the information about DAO and proposal characteristics and voting records. So standard data set used in this space. And here is the summary statistics. And here's the basic stylized facts that we document. We do observe very low participation rate, only 6.3% of total eligible votes. There is concentration of voting power, and the top voters are typically core team members, institutional investors, and third-party service providers, and so forth. Key opinion leaders, so-called influencers on the social media platform as well. Maybe you can help me out. I'm just saying.
Yeah, I'll just quickly go through our empirical findings. So here we regressed like the participation rate and concentration level on a set of DAO and proposal characteristics. And here are the coefficient plots from these two regressions. We do find like there is a lot of variation across different DAO types and proposal proposal categories. And we show that like the larger DAOs, they have lower participation rate and a higher level of concentration. And we also find like for more complex proposals, there is more concentrated voting power. And next slide, yeah. So we focus on 2 groups of governance influencers on Snapshot. One is the proposal managers who are granted high-level permissions to manage the Snapshot space and proposals. So these people are likely belong to the core team members, and they are responsible for screening the proposals before posting them on Snapshot. And the second group we look at is the top decile voters with voting power in the top decile among all the voters on a given proposal. So here we show that there is abnormal trading by these 2 groups of governance influencers in the 1-month window around the proposal creation date. So the abnormal values are calculated as a percentage increase relative to the estimation window. We can see there is a significant increase in the trading volume in the 1 month prior to the proposal creation. And then we regress this abnormal trading volume on the time dummies while including a set of control variables. And we find that the total trading volume increases by about 16.8% in the 1 month prior to proposal creation. And we further decompose the investors into active investors and passive investors. So the active investors refer to those who play a role in advancing the proposals, such as the proposal, including the proposal managers and all the voters. And we show that the active investors show a more pronounced increase in trading volume before proposal creation compared to the passive investors. And next, we further, next slide. Yeah. So next, we further decompose the active investors into proposal managers, top voters, and bottom voters, we show that the top voters exhibit a more pronounced increase in trading volume compared to the bottom voters, and both the proposal managers and top voters are the primary contributors to the abnormal volume spike. Next slide, please. Yeah, and here, so there are two explanations for this abnormal trading volume by governance influencers. One is that these people, they just trade tokens to accumulate voting power, trying to influence the proposal outcomes. And another explanation is that these people, they engage in insider trading because they are deeply involved in the governance process, so they have some advanced information compared to other stakeholders. So to decompose, like to separate these two explanations, the voting power accumulation and the insider trading motives, we first examine the trading directions of these two groups of governance participants. So we show that like if the trading is driven by insider trading, we expect the investors to purchase more tokens before proposals with positive returns and sell more tokens before proposals with negative returns. But if the trading is driven by vote accumulation, we expect they purchase more tokens regardless of a proposal's value impact. And and we find like the proposal managers, they engage in.
You have 2 more minutes.
Okay. So we find like the evidence of like the proposal managers engage in insider trading, while the top voters, they are likely trade for the incentive to accumulate votes. And here we examine the profitability of the trades made by these two groups of investors. So the profitability is measured by like the 15-day market adjusted by the whole abnormal returns, which is short-term profitability. So we find that while the proposal managers earn like short-term profits, the top voters, they do not achieve like any significant abnormal returns, which further indicates that these two groups of investors have different trading motives. And next slide, please. Okay, so here we show that the proposal managers, they make more profits in small DAOs with worse information environment and in DAO and concentrated voting power. And then we show that like the voting designs such as delegation, cooperative voting can help to mitigate such insider trading profitability, because these two voting designs can help increase the monitoring of the community members, and they also limit the power of the block voters. And next slide, maybe I'll skip this one. And finally, we examine like the whether there are any negative, there are any economic consequences of this conflicts of interest in DAOs. So we examine how the TVL of DAOs with varying levels of governance issues change during market crashes. We look at the two market crashes. One is the Terra Luna crash, and the other is FTX collapse. We find that both groups of DAOs, they experience like decline, but the DAOs with a higher level of conflicts of interest declines more. Okay, so I think we can skip this regression results and we jump to the conclusion. So in this paper, we show that the governance in DAOs is actually centralized. The participation rate is low and the voting power is highly concentrated. And we show that the governance influencers, they engage in abnormal trading before proposal creation. And one reason for this is like the proposal managers, they engage in abnormal trading to earn short-term profits, while the top voters, they trade more tokens to accumulate voting power. And we show that these like governance issues have some negative economic consequences, but fortunately, like the voting designs can help to mitigate such issues. So the main takeaway from our paper is that DAOs still face some governance issues we often see in traditional firms, and we need like better design and more regulatory oversight to overcome issues in these new digital organizations. Yeah, I think I'm going to conclude my presentation here.
Thank you, Bill and Jan. Jillian, you have 12 minutes.
can everybody hear me? Or do I need to use mic? Okay, perfect. Okay. So I will say that this is the third time I've seen this paper, and they have iterated every time. And so some of it I was really happy to see of this less comparison to corporations. So I might skip over it. But in the, okay, in the, where am I going to go next? Okay, there we go.
Jillian, you might use the mic so the Zoom people
Oh, okay. There's the mic.
and there is also on the
And then, okay, perfect. So I do think it's a fantastic research topic. I have been super excited to see more people going into DAO research. Ian and I first wrote a paper about 3 years ago on it when I was like, oh, this is going to be the future. I put WEF up there just to say it's also something that both Democrats and Republicans like, so it's sort of interesting in that regard. But why do I think of it as super fun, right? So DAOs is an exploration of Coasean boundaries, right? Coase's Nobel Prize winning theory posits that basically organizational boundaries are defined by the point at which transaction costs. Basically, it's easier to operate inside than outside. And we know in firms in the US, half of production happens inside firms. So it really matters what we're doing. But what is this going on in Decentralized? Well, if we really think, and sort of we'll start to frame the paper more this way, if we really think that we're massively reducing the transaction costs from agency or other things, then that means actually we can expand it. We can expand our boundaries so far that we could perhaps, at the limit, be totally decentralized and totally, geographically unbounded. I don't think we're quite there yet. That's what their paper is saying, but that's the hope. And it's sort of thinking about where do we get that optimum point in this. And so, I take fully that I really like their idea of does the label of decentralization hold? Are we going to have boundary expanding behavior? And I love that their first version of the paper was more negative on DAOs. Now I think it's changing to this slightly more positive that we need to fix things. But it's there. It's there. It's getting better. Perfect. And so today I'm going to actually push them. This is a different slide than I had previously pushed. I'm really going to push on this insider trading in particular. So just to go over their main findings, because I know it was sort of quick at the end, they basically show that, yes, there's high centralization. I think everybody knows that. It's because people are sort of lazy, and it's basically VCs, university blockchain groups, and developers. That's who votes, right? There is abnormal trading volume before the votes. So voters exhibit significant abnormal trading volume. It's really those people who are the proposal managers. The proposal managers, they're typically elected within DAOs. So it's sort of interesting that this elected position, those people are the ones that are getting this excess returns that they believe to be in the data. And then basically they do a bunch of heterogeneity tests that I think are very welcome. They're very descriptive and helpful. And then it's sort of also associated with long-term performance via some of the things we saw with total value locked. The strengths are it's timely. I think it's useful. My comments will really focus on sort of, which I think they've already addressed a little bit from a previous version, these main economic tensions, their assumptions, and then I'm going to, again, go through my more optimistic, although they finally wrote the paper in a more optimistic way, a more optimistic interpretation of DAOs. Okay, so when fixing one economic problem, right? Hey, we just fixed the agency costs, or we tried to fix it. You always introduce new risks. We know this with DEXs. We fixed one problem, and now we have, front running, and we have sandwich attacks. It's the same idea in DAOs that we fixed one problem, but new ones have come up. It's really hard to coordinate globally, even though we actually now have this benefit of crowd wisdom. Okay, and so what should we do? I think that is what, I really like the theorists in the room. This is a really great area for theory, right? Corporate governance theory is generally lacked. We can now add theory here and think about, which inefficiencies in this new setup are we willing to accept? Which transaction costs are we willing to accept to expand the boundaries of a decentralized organization? So are corporations the right benchmark? I think they did a much better job of saying, no, they're not, right? The voting process is totally different. And so I'm going to skip over this one in the sense of, I'm glad that they don't compare it to corporations anymore. It takes a lot longer. They don't get to vote on as much stuff. It's really only about disclosure. And here, they are really voting on everything. Tokenomic design, they're voting on governance, they're voting on pay, they're voting on things that you would have never expected to happen. Okay, so then I guess today's new comments are going to be about legally, is this insider trading? I'm more skeptical than they are that there's any insider trading going on. So there's one view is that DAOs are transparent, so there's no material non-public information and no violation of fiduciary duty as token holders or community members. You know, there's not a duty owed to shareholders. All right? So the legal reality, I'll give them that there's probably information asymmetry still, and there's probably a fiduciary relationship that exists. It's not going to be the traditional one we think about with shareholders. It's going to be one about trust and misappropriation. So how would somebody bring a case on insider trading? It's all going to be a federal lawsuit, right? And it doesn't matter where your jurisdiction is, because the U.S. can bring federal charges even against FTX when they were in the Bahamas or wherever they were. Okay, so it's going to be Rule 10b-5. So assume how we test aside, I think they could probably pass that. Where are we going to go after? Well, there's two theories, right? There's a classical theory, and you're going to fail at that. There's no way that, that would require a fiduciary duty to a shareholder, and DAOs would fail. Where we're going to get it is this misappropriation theory, which is trading on information obtained by breaching a duty of trust to the source. Now, this is where I think it actually gets gray and nuanced. The original case was, it went to the Supreme Court, and it was U.S. versus O'Hagan, and they basically held a lawyer in the Pillsbury case, said he had a fiduciary duty basically to the person who revealed the information to him, even though he had no relation to the shareholders. And that's basically sort of what it's become now. And this is the main tool that the federal team prosecutors would have. So in their paper, they're talking about whales and people like A16Z. And that's where it gets me frustrated, right? Zuckerberg, as we all know, retains 51% share of voting control in Meta, right? If he wanted to shoot down an M&A deal, he could any day of the week, right? And this is not insider trading. Okay, he's acting within his rights as a controlling shareholder. He's not breaching any duty since he's entitled to vote his shares. And the info about his voting intention, whether he knew what he was going to do ahead of time or not, isn't misappropriated, right? It's given its own decision. That is exactly what a DAO whale would be doing, even if they controlled it. They're a controlling shareholder. It's the same analogy. Simply having a large position and acting is not insider trading. There's no breach of duty to any information source. So what could it be, insider trading? So what plausible cases could I come up with? I think probably the code error is the best one. There's a critical bug in the protocol. There's dev team Slack. They're talking about it. Somebody sees it, and they go and they open a new wallet, or they do whatever they want to do to try and get around it, and that's the insider trading before that information is disclosed, because that would be material non-public information. That's probably relatively rare, and right, they would be on that Slack channel going elsewhere. That would be the way they're breaching this confidentiality, right? Because that's going to be the turning point in the law here. You might see it with regulatory developments, say the legal team knows something that's going on. You might see it in negotiations, but I think this one's still gray, right? Say there's some non-public partnership negotiation before any governance proposal, and then the founder trades on it, which is what they're seeing a lot in their data. They're like, oh, we know this governance proposal is going to come up. We're trading on it ahead of time. I'm the person bringing it up. I think that's probably not actually as clear-cut as they make it seem. He put the Uniswap example at the beginning. I'm not so convinced, right? And I think for their paper, I'd love them to just discuss this legal reality. And this is why I'm not so convinced. So this Aave counterexample to insider trading. So the point was that DAO founders, they can't just push any proposal they want through. They make it seem like they could. All right, so Aave was trying to get into real-world assets. They were like, let's do this thing with Horizon. And they brought it forward, and the founding team did, and then basically everybody hated it. Overall consensus across the DAO is that there's no interest on other tokens. The consensus will be respected, and they basically didn't even bring this proposal forward. Unfortunately, the way their data set is constructed, they do not have things that never went to a vote. Ian and I have looked at a small sample of things that have never went to a vote. So I do think there is interesting counterfactuals there as well. And then this is the other thing that I thought was cool. So I decided to say, okay, now they're coming up with their Wyoming laws and their Marshall Islands and different things. What could we do about insider trading? And I think by doing the LLC ones, we actually can get around it. Why? Well, first, when you do your LLCs, you're going to have to come up with this operating agreement. And in doing that, well, I think the implications for insider trading is you're still vulnerable. Those operating agreements are going to give you much clearer duties, and you might actually be able to say what is confidential and what is not confidential and define it exactly there. And if you can define what is confidentiality in these duties, I bet you we're not going to go to a court, and the court's not going to say that, LLC laws, they're going to rely on that rather than a novel interpretation of insider trading and securities law. And so I think for them, just again, embrace the legal gray, discuss it. I mean, this could be a cool thing. If you do an LLC, you probably have an advantage of no insider trading. You should use it as a marketing device. Okay, other nuance. They added our stuff from our paper about the proposal content, so I'm really happy, but this just sort of gives you a sense of how much craziness they're doing. But I still think that there's probably selection effects, right? What they're looking at in particular, and I saw that the number of observations went up in their study, and I didn't quite understand why the number went up, but the one previously I had seen, it went down to, they were only looking at about 3,000 proposals. And why? Because they were trying to select on those that were the most important proposals. And I think understanding what are the most important proposals is a really hard thing to do. So I'm glad to see that they were doing more heterogeneity tests. Because one of the things I would think about, yes, we're talking about, they have this thing about forums in their paper. All DAOs have forums or a Discord channel or something where they're chatting. And they claim that it's only about 50%. But a lot of things do get decided ahead of time here, right? It's not that, when we go to a vote that we don't have some idea. Similarly, if you're picking the important one, well, this is showing you how many votes, and this is compound, which is one of the main examples that they use as they do a specific test on it. And there's a lot of other votes going on at the same time, so how do you know you're not muddying it and there's not spillover effects from a different vote onto what you're seeing? And so I think these are challenges that nobody can really solve. There's not a specific way to do it. So I think maybe just downplay again the insider trading part and instead just focus on the sort of super interesting descriptives, okay? So then this gets me into my more optimistic interpretation. So this is Ian and I's paper that got published in the AA, and we had showed that basically this is 2020 to 2022 was our time period, and we saw that concentration was going down over time. And we measured it in an HHI type of way. They measure it, and they show concentrations going up. But they're always using a Gini coefficient. I had to sit there and really think about it and go through the math and what is actually the difference between these two. They shouldn't be different, right? So HHI overweights big people. It does. It's all about monopoly. And so we really care. So we're actually getting less concentrated on the big people. What they're doing is Gini coefficients weight the inequality. They weight the little people. Okay? And so this is saying that, hey, actually, if you look at it, less little people are participating. And what I'm saying is, actually, we're getting more people participating. It's just more big people are participating. And I actually take that as a good thing. I think we're moving from a world where there's only whales to, this would be an oligarchy. This was my best interpretation of it, the Roman empires. I think we're getting better. That's progress. That's good. Okay, other things that I think are good and interesting. This forum thing, I'm going back to it, because they claim there's only 45% have forums. I disagree. I think 90+% of them have forums. But what I find super interesting is their test of has forum, no forum. If you have no forum, they claim that insider trading is a lot higher. If you have a forum, it's almost non-existent. It's close to zero. And this is the same variable that they showed nicely in those charts, where when you have a shock, they respond differently. And so why? What do I think the forums are? And so MetaGov put out the DAO standard. And I started to see them adopt it. I've been asking them for the exact dates because I'd love to do a diff and diff on this. But basically, one of the things in their protocols was to put the link to the forum on Snapshot where you vote, right? So now you have a link to the forum. That's what they're seeing. I know they're pulling the Snapshot data. And so that's why they think that there's only so many people. Well, now that we have a standard, that means you're actually a different proxy. It's a proxy for starting to use better practices, for starting to do good corporate governance or good DAO governance, however that's defined. And so this is my more optimistic, happy potential alternative that experimentation is working, right? This great paper, this was Eliza Oak and the guy at Stanford in the polyecon group. They have a nice paper on what, basically, do we airdrop Did it work at OP? It did work at OP. We got more participation. So there's techniques that we can use. Ian and I are running an experiment on futarchy right now. It's looking promising. I think all the stuff with Allo Capital, I think there's just a ton of experiments out there, and we have to think of it as this very early stage of DAO governance, and we're learning best practices. We can't just port what was best practices in the corporate centralized setting and call that good governance, okay? And so that's my big implication for them, is, if we think this experimentation appears to be working, then what is the solution? Because their original one was more regulation. I think maybe the solution, especially with this insight about standards, is we should just get auditors in this place to say they're following standards or doing something like that. Or we can have a reg tech solution. We do not need to have regulators come in and look for insider trading. That is just not what would be good. So in conclusion, I think it's much needed research on an important and timely topic. I'm excited about what they're doing. I think the iteration of this paper, guys, I think you did a fantastic job. And I really, I look forward to seeing it eventually get published. And, I'm excited for everybody else to read it in the room. It is really a good paper. Thank you.